Hi everyone, this is Zach with the Money Channel. With BlackRock CEO Larry Fink saying that cryptocurrencies could revolutionize finance, a lot of people are wondering why now after a history of being a big Bitcoin bear. So today we're listening to several crypto thought leaders on why the switch up from bear to bull and what it means for Bitcoin holders. We're starting off with Crypto Wendio, who is clearly concerned about the process for crypto holders with a Bitcoin ETF. Specifically, the losing control of crypto assets, not having self-custody over the assets. Her argument is that it sort of paints an ironic picture about cryptocurrency at large. However, the price action will be positively affected. Here is Crypto Wendio with her perspective.
The Bitcoin spot ETF, everybody's going to have access to Bitcoin. It's going to be a lot easier than going on Coinbase and participating, okay? And with that being said, you're going to be relying on like a third, even like a fourth party to custody your Bitcoin. And a lot of people aren't talking about this, but if that entity goes bankrupt, you lose your crypto assets, you lose your Bitcoin. It is not 100% safe. Just because you have your money with BlackRock or just because you have your money at Wells Fargo or whatever entity that is, these companies could go bankrupt. And if they go bankrupt, you'll lose your coins. What also is going to happen is we're going to see more people get involved in Bitcoin, which is great. However, they're not going to want to practice self-custody. And the whole purpose of Bitcoin is to practice self-custody so you own your Bitcoin.
Ether Capital helped launch the world's first spot Bitcoin and Ethereum ETFs in 2021. In the midst of Fidelity and BlackRock pushing for their own Bitcoin spot ETFs now, Ether Capital CEO Brian Mosoff talks about who is going to invest in a Bitcoin spot ETF versus those who go and buy Bitcoin directly.
I would say that investors may not be looking necessarily at structured products today. The people who are buying the assets direct are usually ones who are a little bit more tech comfortable, maybe they're a bit more internet native, and so they're buying whether it's in bull markets or bear markets. Those people are following the industry on Twitter and deciding that they want exposure in their portfolios to the sector. The professional investors or retail investors who aren't following the space, who are more likely to buy a structured product, they may come at some point later. So I don't know if an ETF were to launch today in the US, if it would see billions of dollars of inflows on day one. But again, that's okay. It'll happen when the sentiment continues to shift positive. Where the sentiment exactly is at currently, I don't know, is that relevant? I think there's big catalysts on the horizon. When one of these ETFs gets approved, that'll be a very big deal, and the largest market in the world and one of the strongest crypto development communities is right here in the US.
Amidst ongoing lawsuits between the Coinbase and SEC, there's speculation that BlackRock knows something that everyone else doesn't. With that, we have Bitwise CIO Matt Hogan talking about what he sees happening and reminding us about BlackRock's prior moves with Bitcoin and Aladdin.
I don't think there's any behind the scenes smoke-filled room message passing. What I think is that BlackRock has extremely large resources and extremely well considered people who are focused on this, who have been working on this for a number of years. There's definitely talk in the industry of the discussions that BlackRock had, not with the government, but with other players in the space over the preceding months. So I don't think there is any backroom deal at all. I just think they've been evaluating this for years. They've been serious about this for years. Remember, they pulled Bitcoin into the Aladdin network a year or so ago. So they've understood that Bitcoin and crypto is an important space. They've been working on it, and I think they just figured the time was now. Maybe the Grayscale lawsuit played into that, but I don't think there was any special information passed.
Then we have the UK's CF Benchmark CEO Sui Chung talking about his optimism towards the SEC approving the spot Bitcoin ETF. Also talking about the difference between surveillance of the spot Bitcoin ETF and surveillance of other commodity ETF products.
We're very optimistic that approval will be granted by the SEC because the SEC has consistently stated that it wants to see certain safeguards in place, particularly information sharing between the listing exchange of an ETF and crypto exchanges. That bar has been very clear, and we believe that bar is being met by the provisions that collectively we have all put in place. So traditionally, commodity ETFs the commodity markets, the spot commodity markets, are not traded on organized marketplaces. Spot oil, spot gold is negotiated over the telephone, via email, via chat, etc., not on an organized marketplace. So historically, commodity ETFs, the listing exchanges of commodity ETFs have information sharing agreements with derivatives exchanges, because that's the organized marketplace where transactions happen. Crypto is a little different in that spot crypto, physical spot crypto, is traded on organized marketplaces such as crypto exchanges. And hence, we haven't quite been here before. There's no exact parallel. However, in the relationship between spot markets, ETF markets, and derivative markets, that is a well-trodden path through something called the ISG, which has existed for a number of years now. And this is a forum by which ETF listing exchanges and derivatives exchanges share information.